All right, guys, we'll get started here in just a couple minutes. Real quick, if you can, it's always fun to see this. I know we've got the map in the room, but type in where you're actually tuning in from. So again, type in where you're tuning in from. We've got Malaysia, UK, Poland, St. Paul, Minnesota, Bristol, Malaysia, Oklahoma, Panama, Australia, Rhode Island, Pittsburgh. Yeah, I bet it's cold in Pittsburgh. New Jersey, Latvia, Germany, St. Louis, Netherlands, Mumbai, Portland, Oregon, Singapore, Florida, Eugene, Oregon, Flower Mound, Texas, Philly, London. All right, good deal, good deal. Very cool. I'd say safe to say we've kind of got the whole globe covered. So guys, this has been an incredible week. You know, the feedback that we've gotten. I've gotten email after email. I was up till about 1 in the morning just responding to some emails, and really the amazing thing is the feedback that you guys have gotten about really enjoying the time with Scott in the room and with Pip, and you know, we're really appreciative of them coming in here, of throwing the live market up in front of you guys and just being honest. I think that you know, that's an important thing to look for whenever you are looking for someone to learn to trade from, is one that they're not, you know, just trying to, you know, pull a fast one, but they're actually honest, and they come in here and you know, are transparent. And so we appreciate that. I know Scott's in the room now, so I'm going to turn things over to him. But Scott, thanks to you and to Pip and to all you guys in the room that have been awesome throughout this entire week. It's been a fun week for sure. So Scott, I will turn things over to you.
All right, thank you, Morgan. Great to be here, everybody. Glad to see such a big crowd here again, right after non-farm payroll. Non-farm payroll was disappointing, to say the least. And of course, the market react. Hopefully, all of you were flat. We talked about that yesterday, about being flat in the market, and that how important that was going to be. And we'll see what happens here. So anyway, let me get this whole program going here. And let's see. Video player. Here we go.
Well, good morning, everybody. This is Scott. Welcome to the New York Session Live Training Room. Don't forget that trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, your level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest any money that you cannot afford to lose. Be aware of all the risks associated with foreign exchange trading, and seek the advice of an independent financial advisor if you have any doubts. So, welcome to the best live trading room in the Forex, bar none. All you got to do is ask our traders. So, a couple things you need to know. Forex Target Trading LLC is the educational part of our business model. It's the methodology that we use. ProAct Traders LLC is the technology part of our business. It's the software that we use. So we combine the methodology with the ProAct charting software to create our results. And our results are taken from actual traders using the combination above, and then averaged for our pip capture. Now, since many traders take only 2 or 3 of them, and other people may take 2 or 3, it's virtually impossible for you to match our record unless you took every single trade and you never slept and you traded every single market, all 3 markets. So don't think that you can match the record. It's just a running total. So in other words, this is our trader's record, not my record. My record doesn't count. Your record's what counts. Things to know. We are trading setups, not trades. Any decision to take a trade is yours. We are trading what an RF1010 or a 6 aces trade setup looks like in a live trading environment, not after the fact. So I may say this is about an RF1010 setup. Enter when ready. That is a trade setup, but it's not yet a trade. You, emphasis is on you, you still have to look for T30s, any previous support or resistance, any fib barriers that are in the way today. You must assess the risk and reward. You must know the target, and you must know the stop loss. If you don't know the target and you don't know the stop loss, you are not a trader. You are a gambler. Wait for a hook or a center And if everything is right, then you make the decision to take the trade, not me. So stops are always going to be the technical stop. We may say the stop's around 110.12. You must use the technical stop, which is the last support or resistance, depending on your direction, plus 5 to 7 pips on a number that ends in a 3 or a 7. So in this case, it must be 110.13 or 110.17. We also never use a 5 because 5 is used often in option contracts. Stop should be moved to break even after 17 to 21 pips, depending on the real estate of the day. So in other words, it's not automatic. At 17 to 21 pips, you look and see if you might be able to move your stop. Anything spoken of in the room is an opinion, not a trade call. Everybody in the world is entitled to their opinion, including me, but my opinion is not a trade call. This is not a trade room. It's a training room. But we do make documented pips in here, and we are here to teach you to fish, not give you a fish. We're training how to use our methodology combined with the ProAct charting software to its full advantage as a service to our live room subscribers. So, I want to welcome our demo traders here. Anybody here on a one-day pass, we're glad you're here. Hopefully you see some things you like. I think you're going to find out pretty quickly that we are a big Forex family, and everybody here is helping everybody to get better. Okay. We are Forex target traders. That means many trading opportunities we identify are not entered during the New York session, but they may fulfill in subsequent sessions. That does not change the trading opportunity. So we will also do a heads up after the session that is recorded. We do that every day except Friday because there is no session after Friday in New York. If you're a demo trader, you must pay special attention during that recording. Live room subscribers have the ability to review that recording, but you do not. Live room subscribers also get chart alerts if we see anything later, but this just means go look at the charts, since these will not be trade setups, just things to watch for. They look like this, and they do have stops and limits, but these are sent out anywhere from 3 to 12 hours ahead of the market. So it's just a starting point for you in the wide open space and to see if the real estate still holds up and whether these numbers are still good. Now, any alerts either talked about verbally or sent to live room subscribers are for educational purposes only. This is not a trade signal calling system of business. Please use your real name. We don't like to use fake names or my big fat FX. It doesn't work for us. No swearing in the room. No sound. You just log out and log back in. It's an internet issue on your end, not on our end. There are no dumb questions in here. And all ProAct live sessions are recorded. So anytime we're live, it's being recorded. Now, it's not about trading every day. It's about trading that one right day. You make money by waiting, not by trading. Sounds so silly, nobody wants to believe it, but it's true. The one trade you're going to learn in here is the wait trade. We wait for our trade to come to us. So I'm going to look at the RF1010 trade setup now, so pay attention. This is a trade setup we look for every session. It's the first momentum move of the session. Could go 25 to 30 pips on initial thrust, and it could end up going 80 or 90 by the time it's all over. Alright, so we're looking to make a buy here, and it's found in the RF1010. It's called the RF1010 because it's found in the Royal Flush template. That's the RF part, and we use the two 10-minute charts. That means that the 60-minute gatekeeper here is not part of this setup. So we're looking for a buy on the euro. How do we get into that? First thing that has to happen is our gatekeeper has to set up. Alright, so what are we looking for? First thing is a blackjack. That's that black candle down there. Nothing magical about it. Hits the moving average. We turn it black so we can find it. But we ask that candle to tell us what direction is the money coming in. It puts a green diamond on the bottom, so it says the money's coming in a buy. We're interested because we're looking for a buy. Next thing we need is the moving average to be green because we're looking for a buy. Next thing we need is candles above that moving average because we're looking for a buy. And finally, we need the momentum indicator called the HMI. We need it to turn from red or black to green because we're looking for a buy. All right, as you can see, that didn't happen. So we have to wait a couple of candles. We wait a couple of candles. Everything gets in harmony here. Now we can go up to the trigger. What do we need up here? Up here we need a bright neon painted green arrow and painted candle. All right, just be the opposite going down. All right, so there it is. That tells us momentum is entering to the upside. But the RF1010 is a trade setup out of the desert. What is the desert? The desert is the highest moving average and the lowest moving average. If we're inside the desert, we do not have this trade set up. So we wait for the candle to pop out of the desert. It does so on that long candle there. That's called the trigger candle. And we will take the very next candle on one condition, that we have total harmony down in the gatekeeper still. All right, a little bit more about the trigger candle. Before we enter, we let it center. What does that mean? All right, before we enter any trades, we let it center on itself. So the trigger candle goes off and takes off and goes up 20 pips. What do? Nothing. We wait for it to come back on itself halfway, or center on itself, which in this case would be 10 pips. We will then take the trade from there on one condition, that we have room to the targets. Now, it's very important. We never make an entry unless we know the exit. All right. Now, that's also important because we could get additional triggers. If we get an additional trigger, can we take this trade? The answer is yes. We got plenty of room to the next target. Then we get another one up here. Can we take this one? And the answer to that is no, we can't. We're too close to the target. So you're a newbie, though. You say, yeah, but man, you could get 5 or 8 pips up there. Why don't you go grab them? You'd be right. You could get 5 or 8 pips up there. And that's exactly what the average retail trader does. They trade for 5 to 8 pips, and so they then must be right 90% of the time for the rest of their life. It's not possible for you to be 90% correct for the rest of your life unless you are the greatest trader on the planet. Now, if you are the greatest trader on the planet, don't stop doing what you're doing, and you don't need to be in this room. But if you're not the greatest trader on the planet, you have got to stop trading for 5 to 8 pips and learn to trade to targets. So you decided to take that trade and get 5 to 8 pips, and guess what? The big boys can't make that trade, so they go away from the target so they can go at it again. You get stopped out, and what do you say? The daggone broker stopped me out again. No, the broker did not stop you out again. You took a trade you never should have taken because you took it right into a target that you didn't know was there. Alright, so now I'm going to show you an illustration of a sell, okay? Remember, the 60-minute is not part of this trade setup, so I'm looking for a sell. So now I need a blackjack the other way. There it is, to the downside. I need the moving average down. There it is, to the downside. I need candles below the moving average. There they are, down there. Alright, and I also need the momentum indicator telling I have enough gas in the tank to drive this to the target. Check, I got everything I need down here. I go up here looking for an arrow and a painted candle, and not only do I have an arrow and a painted candle, I also have a white dot. The white dot says we are potentially going 55 pips. Alright, so I have a potential trade set up here. The question is, do I have a trade? And the answer is, no, I don't. And the reason I don't is because I'm right above the 93.00 number. We never trade into a 00 number or a 0.50 number because option contracts are sitting on those numbers. If there's an option contract on it and it executes it, then the trade will go the opposite way. So we need to be able to move our stop to break even if we're going to trade into an even number or a 0.50. That's number one. Number two, we're still inside the desert here. So you see, folks, a trade setup is not a trade. And retail traders get this wrong all the time. Right? So, if you're new to our room, I'm going to quickly go through the 19 currencies, and then we're going to come back on those that show promise. Please hold your questions until then, and we will answer.
All right, folks, so we're here looking for opportunities, and on the currencies, we had a non-farm payroll this morning. Hopefully all of you got flat. That's the key. Make sure you're flat. That way you don't get whacked in this thing. This is a crazy time. And we'll look for some opportunities. Now, normally we don't even trade in my room. We don't even trade on Friday. Friday is a very bad day to trade. It's a dangerous day. It's square up day. What does square up day mean? It's a day when all the position traders exit their trades. If they've been selling over the week, all week long, they will exit their trades by 3 o'clock today. We don't know when that's going to happen. It could happen in 10 minutes. It could happen until 2 o'clock this afternoon. So since we don't know when it's going to happen, we don't we try not to, we don't trade basically. But we're here in the market today because you guys are all here. So we're going to try to take advantage of that. All right. So if we see something, we might opt to do it. All right. So in order to do that, we have to know where the currency is going. And you saw that we had a $1 negative non-farm payroll, okay? A very disappointing one. There are huge options today. Yes, by the way, let me just make sure you all see that. All those red ones are, you know, huge options on the currencies right there. All right. So, and you can all see they are even numbers and 50 numbers. Okay. For the most part, they're all even numbers and 50 part. That's why we don't trade into those things. All right. So just there's a good lesson right there. Just look at that slide and say, why did they say, do we not want to trade into a 50 or a 00 number? And there's your answer right there. All right. So anyway, back to that. All right. So the euro has moved up here, but we're still in a downtrend. We will not be a buyer on the euro until we break back up into here, folks. All right, so just remember that. All right, this could still simply correct up there and still sell off to the downside. All right. Now, typically that doesn't happen with non-farm payroll. Non-farm payroll is a fundamental change in the marketplace. All right, they forecasted certain things. It didn't happen. All right. So what do we now know right here? If I draw this, you'll immediately see what it is. All right, let me do it with a real target, a real tool here, and you can see that we are stuck inside a wedge. Okay, so what do we do when we're stuck inside a wedge? We do nothing. All right, that's very important. We don't do anything when we're inside a wedge because we don't know what's really happening. We can't tell that yet.
There's something happening here, but what it is ain't exactly clear.
There's something happening here. What it is ain't exactly clear. It'll be clear if they break up north. It'll be clear if they break downtown. But inside a wedge, we don't know what they're doing. And so the thing to do when you see a wedge is walk away. Who's in charge of putting a wedge on? You are. You're the trader. Your job is to draw it in the charts, all right? British pound is moving to the upside, as you can see. Nothing to do, folks. We're a seller. We won't be a buyer until we get up in here, all right? This makes sense, though. We've ever had a 1, 2, 3 long. This is a 4, and then maybe we'll get the 5 wave to the downside. Well, we got to finish the 4 wave up here. There's nothing to do when we're doing a corrective wave to the upside. Only 20% of the money is made against the trend. 80% of the money is made with the trend. All right. If you can't double and triple your account when 80% of the money is here, all right, being made, you will never do it when the 20% is being made. So get it out of your head, just walk away. Don't try to counter trade. You don't have the skill. If you don't have the skill to double and triple your account at 80%, you don't have the skill to do it at 20. All right? But you have a goal now to get to that level. See, that's the whole point. All right, I can't do that yet. Well, how do I do it? I better get better. See, it's not really that hard. All right, so we're working a channel up to the upside, as you can see right in here, and you know, we get up here to the top, we'll see if we get the sell-off. We will want to be a seller up in here. That's where we want to be a seller. All right, dollar CAD moving to the downside. Really, there's nothing for us to do here. It's a counter trend trade, but we've been waiting for a long time for this thing to move to the downside. They finally got something, a catalyst to make it happen. We'll be interested once we get down here around the 50% range for the bounce to the upside. All right. So we've got to cover quite a bit of territory before that'll happen. That probably won't happen until Wednesday of next week. All right. Swissy. All right. Swissy, as always, one of my blog posts this morning, okay, because it was a negative non-farm payroll announcement right here. You can see we have a big wide open space very close here where we were this morning. We've now bounced up and we're at 9,000, okay? So the 9,000 is equilibrium, as you can see, for the currency. 9,000, all right? They move below here, back up above it, back down, back below it, back up above it, back down, all right? So 9,000 is equilibrium. What the market has said, fundamentally speaking, the market is basically priced correctly at 9,000. So we'll just have small oscillations off of that until we get some other news that makes it different, all right? So that means that this is the opportunity right here, and we got to get to it, which is at 90.86. We're at 9,000. We're at least 15 to 20 pips away before that will ever happen. But that will be the trade if we get it. So we would be interested in the Swissy to the downside. All right. I'm not going to trade. I don't trade on Friday, folks. It's just too dangerous for me. But you guys will probably think about it. All right. Ooh, hold on. What's happening here? That's a little strange. Hold on. All right, there we go. All right, so over to the dollar yen. All right, over here to the dollar yen. Yeah, dollar yen. We've had a breakout now, okay, and now we have a real quandary for this, okay, because agenda in place. All right, there was an agenda in place to drive it to the upside. We now have information that says the dollar side of this should go down, and you can see there's a big wick there as the dollar did go down. But you also see that there's no follow through. They have not followed through yet. All right, so we have information that says this should go down to here, and we have a currency that is not doing that. All right, there's a target up here. So the thing to do is to just sit on the sidelines and wait. Okay, all right, that's all there is to it. There's not much to do here because this is totally opposite of what should be happening, and it's not. All right. Now we are technical traders, so we will go with the buy. If they give us the buy, we will go with it. All right. So I'm going to draw where we are. We're out of there right now, and we're at the very start of a new trend. We don't even have enough information to actually prove the heart line or anything like that. All right, so somebody asked the question is, how do you know about the 80%? And this is because I did the work, all right? I didn't get it from somebody else. I went in the charts and I said, you know, that heart line keeps getting hit over and over again. I wonder what that is. And I went back and did about 2,000 or 3,000 of them, and I found out that the percentage chance is 80%, all right? I don't take people's word for stuff, all right? So I answered my own question. And I have a question as a trader. I go answer it myself, which means 3, 4, 5 hours worth of work to answer a question, all right? What happens to traders? They're stinking lazy and they won't go do it. All right, that's what happens. You had a question about the 80%. How do you prove it? Go in and put trend lines on with a heart line and then find out how many they go to. And you'll answer your own question. All right, don't take my word for it. Stuff I just tell you, I don't take my word for it. I went and proved it. All right, so we'll wait and see on that. Aussie dollar. All right, Aussie dollar is sitting right here at the top. We just had another situation where the Aussie, the dollar should go to the downside, so the Aussie should go to the upside. We have an opportunity here about, let's see, we're at 68. We're going up to 90.16 potential right up in here. So, you know, there's a good chance for that. You know, so it's about 50 pips, and we will be interested in that. So if the Aussie does it, remember, we talked about this yesterday. We were in an ascending wedge, which is bullish for the currency. All right, so there it is. Now, what they've done is they came down and took it to the bottom. So we'll ask a little later how many took this, because we talked about this coming back down to the bottom. If it comes back down to the bottom, you would then get 2 trades, 1 and 2. Well, guess what? It came back to the bottom, so 1 was available. We'll see how many of you took the trade a little later. All right, so we'll see what happens on that. All right, so we're waiting to see if we get a bounce up to there. If we do, we will be interested in that trade. All right, euro yen, I should say, sorry. Let me pull this up here. All right, euro yen is bouncing off the bottom. It's about 2/3 of the way through to the other side of the trend wall. As you see, we got a pole working here, so whatever that is there, it's going to do here. So we can see the pole should finish off up here, all right? Now, that is obviously counter trend trade at this point in time, so we can't trade that thing, all right? Unless, of course, this is now the day chart. All right, now how do you prove that? Every 6 candles is a day. So there's 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, 9 days, 10 days, 11 days, 12 days, 13 days, 14 days, 15 days, 16 days, on up. All right. So you can see that this is actually now with half of a month, it's a day chart trend. That's what it is. So we're going to change it to the day chart trend, which allows us to then trade the 240 trade against that day chart trend. All right. So that's how you figure out how to do it. All right, you go, well, when can I actually trade it? Well, if it's a day chart, I can trade against that anytime I want to, if I can prove the 240 trend. All right, so I can do that. See, I put it on there. I found a support, a resistance, and I proved the heart line. All right, which allows me to trade it up to there. I'm going to take these down HSIs off now because I'm allowed to trade the 240 chart up to the day chart trend. All right, so I pop it with an HSI so I can get a quick trade on. I've already done the PSRs and that to the upside, so why we do them, so we can immediately go and trade that, and you can see we're in a wide open space here. So we're in a wide open space. We know that the pole tells us we're going to here, so we have a wide open space. The pole tells us we're going to end up here. All right, that's where the top of the trend line is. So there's an opportunity there on the EJ, or if it pulls back and gives us an opportunity to bounce, we may trade that. Now, I'm just talking out loud right now, because I'm not going to actually make a trade on Friday, all right? Especially on non-farm payroll day. I don't do that, all right? One of the ways you survive is you take into account risk, all right? And risk today is one of the most risky days on the planet to trade. Every first Monday of the month is one of the riskiest days to trade. See, so there. All right. And thank you, Morgan. All right. So over to the pound yen. All right. Pound yen is at the top here. We're looking for a trend wall crash. We're here at the trend wall. All right. This is the day chart trend. This is the same thing. Because this is a day chart, we could trade this up to here if we wanted to. Now we're looking for the sell-off. All right. So if this gives us a sell-off, we're going to be interested in that trade. Obviously, it's been going up, so we could actually buy up to there. If we break up here into this area, we'd be looking for a buy. We'd have to rechange the trends. The trend, and we'd have to also redo the targets. So right now we're looking for a sell on the pound yen. We'll see if it happens. New Zealand, last of the majors. Okay, so pop this up. You can see we're going sideways here, and the big picture here. They're attempting to break out. We know that we talked about this for the last 2 days. They're going to attempt to break out. Why? Because the Aussie dollar has been changed fundamentally, and this follows the Aussie dollar. All right, so we now have a breakout here. So let's go ahead and start and write it, mark it up. We got a little. It's working a little bit of a. Not quite a trend yet, but it's got the makings of a start of one by taking these bottoms. If we get 1 and 2, we get the right angle, and we're almost got the heart line. Just hasn't been able to reach up there because of this barrier right here. So this is a working trend at this point. All right, you can never prove a trend until you get 3 points. 1, 2, we need a third point. So this has to come down here like this. Then we would know that that's a trend. All right. So right now it's a working trend. If we break up in this area, it would make sense to us now, and we would be able to trade that if it were to happen. All right. Now, it's got about 60 pips to go on a square-up day. It's probably not going to happen. Right? Over to silver. For those of you who can, silver hasn't gone nowhere. It's just sitting there going dead. We're looking to go to 2033 if we ever get the chance to bounce it up. Now, silver is a repository of money when they square it up. So later today, you may see money come into silver because it's coming out of the currencies, but it's not coming out of the market. So they move it into there. All right. So there we go. Thank you, Morgan. All right, everybody notice that? If you have a white screen, try hitting the blue X on the top right and reload. Thank you. All right, so some of you may have that. We'll see. All right, what are they doing with the dollar this morning? Well, they were selling it, and they're still selling it, but they're still in an uptrend. Now, they had a bad, disappointing, I won't say it's a bad NFP, but it's a disappointing NFP, which should drive this to the downside. But as you see, they are maintaining this trend. So that tells me that there's a potential of a agenda in place, all right? And if the agenda is in place, then they'll ignore non-farm payroll. All right, so it ends up being a blip on the screen. That's always the problem with fundamental announcements. They're called fundies. Why are fundies there? Because they could be a blip on the screen. They may mean something, they may not, but they mean something for a little bit. All right, 3 minutes to the 10 o'clock cut. Thank you very much. The 10 o'clock cut is when the big option contracts, the plain vanilla ones, expire. All right, so Ozzy Yen is now finally up into our area we were interested yesterday. It's finally gotten here. This is the area we're interested in. So the Ozzy Yen is on the books for this morning. If you were going to trade it, we got to be above 91.80 roughly, and move our stop by 92, and we're looking at 92.63. So it's got about 80 pips there. It's a nice little trade if it'll break and go. All right, so Euro pound, it's got too small an ATR for us to trade it today. Just walk away from it. And here we are on the Euro Aussie. Okay, Euro Aussie is in a downtrend, all right, and we're looking for the sell-off. We have a set of twins, however, right now. So what are we looking for? That's a potential head and shoulders, but this is also an potential ABC up to here. So because we don't know whether that's a head and shoulders or an ABC, what are we going to do? We walk away from the currency until it proves what it is. All right? By the time it proves what it is, it's probably going to be too late to trade it, and it'll be ready for Sunday or Monday. All right? CAD yen. Right? Pop the CAD yen up here to the 240 chart. And notice I'm not looking at anything lower than a 240 chart, folks. We trade the 240. That's where the big boys are. All right. You can see they're the ones who make the trade. All G right up to the target. How did that happen? I'm surprised, okay? All right, so let's take these off, and we have a full-fledged breakout at this time. This was the original trend right here. Let's take this, take the fibs off, and we're going to remove these fibs. Okay, come on, give me a chance to do it. No, I don't want the fib. Remove, and I want this line off. Remove. Okay. Now, we can see that we can make a trend here. All right, so we're going to start with this line right over here, going right there. We need a 45-degree angle. All right, and we need to prove the heart line, which immediately does it. All right, so I'm taking off this set of twins over to this bottom right here, and it proves the heart line there, proves the heart line there by that support and resistance, okay? So we got a trend to the upside that's less than 45 degrees. We'll now just pop the targets on here. Let me take this HSI off too. All right, we'd already done the targets to the upside, so we will have to go refresh those PSRs. I need to do a set of fibs, all right, from the swing low to the swing high. That'll give me the fibs in this area. Then I stop, and I prove that they know where the numbers are. All right, do you know where they are? Do you stop on the lines, boys? Do you stop on the lines? All right, and that's what I got to prove. They got to know that that's where they are. All right, so when I see them bouncing on these lines, working all on the 786 fib, doing that kind of stuff, then I know that these lines are good. So I got plenty of evidence that says these lines are good. They've already taken this one out. They're right here on this next one. That's where they're at. That's why they're stopped here. There's a fib here. That means this fib up here is good, right? So that I can already tell you that the two opportunities are probably here. I don't know that yet, but it's probably there. All right, I'm going to go back in the past and find the PSRs really quickly. All right. I normally have already done all this. I'm doing this here for you guys in the room so that you see how we do it. All right. Normally I've already done all this stuff. Okay, so here's an uptrend. We're right on this PSR right here. All right. So there's a PSR right here that creates that higher high. There's a PSR right here. To the left, to the right, creates that higher high. There's one right here. To the left, to the right, creates that higher high. And there's one right here. Wow, right there. All right. And we're right on this one right here. We just took this one out. Let me drag this one down here like that. That one's been taken out. All right, so that's where we are. All right, that's the wide open space. Pop it here. Doesn't take that long. And now, the only thing I got to do now is put the HSI on, which gives me the wave targets. All right, so boom, right to them. Doggone it. Look how lucky that sucker is. Now, we understand now why that trade occurred and why they went to there. We know the catalyst to drive it there was non-farm payroll, but we know that they knew where the target was. So they stopped dead at the target. So now here's our next opportunity right here. All right, see how easy that was? CAD yen, looking for the CAD yen to the upside on a break of 92.30. All right, there you go. It's not hard, folks. This is not hard. We're at the 1030 bump. Okay, all those option contracts have expired. And we're now looking for continuations. All right, so up here in the pound chief, all right, pound chief has broken out of the former uptrend. It's in a pole right now. As you can see, big sideways movement, big sideways movement says whatever you did going into this move, that's what you're going to do coming out. So we can see this is the target right now. All right. Now that's 1, 2, 3, 4, 120 pips away. The pound chief has 141 pip ATR. It's already done 60 of it right in here. And as you can see, there's a potential chance of pushing it out to the outside. All right. So this could be very well a reversal. So we're going to sit on our hands and wait for it. All right. And wait and see what happens here. We're not going to trade it. All right. All right. Pound Ozzy. All right. See, it's got a pound in it, and the pound is following the pound dollar is reacting to non-farm payroll, which means the pound on all these crosses is going to react to the pound dollar, right? So they're pushing to the upside, right? So we can see the target is up here. That's totally a counter trend trade. We can't trade the pound Aussie to the upside. Right? It has a 231 pip ATR though. It can rock and roll up there. So we'll wait and see if we get that on Sunday, back either up or to the downside. Here in New Zealand, we're still toying with this breakout right now. As you can see, the chart say, you better not think about a buy. Don't 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 think about a buy. They're telling you we're looking for the sell to the downside. So, all right, we'll go with that. And we pop it up here and say, but does that mean we have a trade? All right, well, that's an up target, so we can take that off. All right, so now we're toying with the break to the downside. All right, and this would be a one wave. There's a two wave. We'd be looking for a three wave to the downside. So we're going to find the HSI. If it continues, it is testing a breakout here. could still be a head and shoulders also, right? Everybody see that? This could still be a head and shoulders right here. All right. So we got to wait for it to prove it. What does it got to do? It's got to come down in this area right in here. Once it does that, there's trade 1 and trade 2 right here. Trade 1, trade 2. All right. So what do? We got to wait for it to prove that they're going to break in this area. If they do break in that area, that becomes an opportunity. All right. It's Friday though. Remember, normally on Friday, when in the old days we did trade this for 2 years and we were done in an hour. And that's why we finally made the conclusion that in 2 years of trading for 1 hour on Friday, we only made about 12 trades in 2 years, right? Because they're just not worth making. They got to be perfect on Friday. It's just not worth making for 12 trades in 2 years to be here for a whole hour, 2 hours on Friday. Take the day off. Right? So anyway, pound New Zealand. Pound New Zealand, here we go. Big sideways move, folks. Just a big sideways move right here, as you can see. And this was an opportunity from yesterday. We talked about this yesterday. We'll come back and see how many people made that Euro New Zealand to the downside from yesterday. They had a break below here, and we were looking for this opportunity here. So they did that, and then they reacted on non-farm payroll straight back up in the air. All right. So we'll see what happens here. And right. Falling wedge, and we see that they did break it to the upside. There's a real possibility that now that we take that off, that this is a big head and shoulders, and they're actually going to drive it up here. So there's no trade until we either get down into here or we get above here. Right? We're in no man's land in here. There's no trade in here. Right? Yeah, but man, I know there's a 5-pip trade in there. I just want to push the button.
Hey, you push the button. I didn't tell him to push the button. Did you tell him to push the button? Nobody told him to push the button. I didn't tell him to push the button. You shouldn't just go push the button. You don't go around pushing string button. I tell you, don't push the button.
Don't push the button. All right? There are 1,000 5-day pip trades. If you trade them, you have to be 90% correct for the rest of your life. That is not possible unless you're the greatest trader on the planet, which I'm sure you're not. So therefore, don't do it. 2 more to look at. New Zealand yen. Let's pop that New Zealand yen up. We already had the breakout yesterday. We anticipated this move here yesterday, and you can see it's driven by non-farm payroll, so it's not something we're going to count. All right, the non-farm payrolls, we don't count fundies unless we live trade them. If we live trade them, we count them, right? Or if we alerted to them, and we have a ton of traders who traded them because of entry orders. Right? So this was a trade this morning. It's just now in position to maybe trade it. All right. So we're looking for it to finish this off up to 85.22 or 84.79. Let's take it down to 60 and see what we got. All right. So there was a non-farm payroll. There was the break, hook, and now the go. All right. So everybody said, where's the break, hook, and go? This is on a 60-minute chart, folks. All right. So you had a pullback and then a go here. All right. So right now we're right here at 84.77. Let's take it down to a 10 and see what she looks like here. All right, so you can see we're underway with the next thrust to the upside. We don't buy when you've already got the thrust going right there. You can't buy it. Why? It's already gone. You had to buy it here. Professional buyers buy at the bottom. Professional buyers do not buy at the top. All right, so we got to wait for it to come back down. If it comes back down, we might be interested on that trade if it would come back down. All right, that's a big if. Right. So we don't buy at the top, pure and simple. Last one is Ozzy Swissy. Ozzy Swissy sitting here right in the middle of nowhere. It's got a big doji right now up on a 240 chart. Wow. All right. Possible head and shoulders in play here, all right, for a reversal to the downside, as you can see. And let me take this off right here. Yeah. And leave that one on. There's a little channel. So we could get a bounce here. We saw the bounce here. This target's already taken out. So if we saw the bounce, we'd be looking for that as they continue this move to the upside. Right? If that were to occur. Right? A little iffy on a Friday. Pretty iffy, but we'll see. All right. All right, so that's that. And Pip, go ahead and open it up, and we're going to get. We only have two session recaps to deal with. How many traded the Aussie dollar? All right, Aussie dollar. Okay, I'll grab it in a minute, Pip. Thank you. All right, Aussie dollar. How many got it? No, Rick. Letting it center is when it does it in one candle. It's actually doing a break, hook, and go inside the candle, but that's what we call letting it center. All right. Jerry, 46, nice job. All right, 35, Demetrius, nice job. Let's see. We'll get those questions answered. We're looking for pip counts right now. We only had 2 people who traded it, a 46 and a 35. Wow, that's crazy. A 46 and a 35 is all. 1,500 traders in there, only 2 traders traded it. All right, 55. Thank you, Liz. Hooray, Liz. Yeah, baby. All right, Phil, 75 and 55. Nice job. 71. Lucian, go up to the right-hand corner, and if you have a white screen, hit the blue X, all right, at the top right and reload. All right, that's it. There's a notice down there in the bottom telling you to do that. 71, 75, 55, 71, 48. Nice job, Bill. 46. Alex, 23. Tom, 42. Nice job, everybody. Okay. 70 and 46. Okay, looks like 46 is good. 46 pips would be the average right there. Nice job. Okay. All right, the other one we want to talk about is the Euro New Zealand. How many pip captures only, folks? The question, I'm not answering the questions. You're not listening to me. The question is, what are your pip captures? The answers are whatever you put in. Other than that, I'm not answering the other questions yet. Please give us your pip captures. Those of you who traded it, Euro New Zealand. To the downside. Anybody? 29, 40, 39. Marcia, nice job. Anybody else? 50, Henry, way to go. All right. 43, Tom, nice. 35, Chris, way to go. 77, 58, 36. Way to press your winners, Phil. I see you're doing it more and more. Way to go. 50 for Arthur. Not asking for the New Zealand chief. May. 40 for Peter. We didn't identify the New Zealand chief because we don't trade that for one. All right. All right, good job, 40, 55. Okay, let's take Marcia's 39. How about that? Okay. Now, before we do anything more, let me pop this up. For those of you who want to know what the week was, here it is so far. I haven't added those 2 in there, but right now, all right, we have 1,207 pips for the week. These are the trades that were made. These were made last week, so there's 200 pips that are not here. So roughly from right here, including our loss yesterday on the British pound, New Zealand, right here, all right, we have about 1,000 pips in the bank, and we just put another 70 in there. All right, so nice work, all you of the traders who did this week. So you can see there's a lot of opportunity. You can't see it. All right, sorry. Give me a second. Our traders who are here every day, day in and day out. So, all right, so there you go. That's what we did this week. Those of you who are interested. All right, well, when you called all us stoopies, I was offended. Why would we be stupid? Why would you be? I'm not calling you stupid. I'm calling you what the money calls you, which is dumb money. They call me the dumb money too, Billy. I'm called the dumb money. You're called the dumb money. We're all called the dumb money. All right. Now, what we got to do is prove that we're not that. All right. See? And one of the reasons to make sure that I drive that into you is so that you do not want that label. All right. I'm constantly telling people, don't be the dumb money. All right. Because we do the dumb things. All right. So. All right. Well, if you're having voice problems, back out and back in. Okay. All right. Move your stop and hold. All right. If it stops you out, you're fine. But if it all of a sudden it goes and keeps going, you're still in the trade. All right. So there we go. All right. How much is a pip worth? It depends on the contract. If you're trading a standard contract, it's $10. If you're trading a mini contract, it's $1. If you're trading a micro contract, it's 10 cents. All right. We learn on 10 cents. We learn down there where it's 30 dimes, $3. And that's where you learn. But as you start to find that you're making money and pulling ahead, then you start moving up to dollars, and eventually you might go up to standard accounts. Oh, why don't trade in? Okay, that's a great question, Daryl. Why don't I trade in the desert? Okay, I'm going to show you why. All right, so let's pop over here to a wild card, and we'll just go to a 10-minute chart. Let's go to the dollar yen. All right. Now, the desert is defined on a 10-minute chart, but what we've done is we've brought down the moving averages, okay? We've brought the moving averages down, all right? So to you, all right, so here we go. This moving average, the red one, comes from the 240-minute world. All right, you see that? That's a 240-minute moving average. All right. When I have candles below the 240-minute move, I have more sellers than buyers. All right. I have more sellers than buyers if I have, because that's an average. An average between 1 and 10 is 5, because that's a static. All right. But a moving average isn't that. A moving average adds a candle and takes one off the back, which means the average moves and always is showing you the average. Therefore, if you've got candles below it, you have more sellers than buyers. All right. This is the 60-minute moving average. All right. We have candles below that. We have more sellers than buyers on the 60. Now, why is that important? Because the big boys trade the 240 and they enter on the 60. Therefore, we are trading with the big boys. There are more big boy sellers than there are buyers. Therefore, our trades are to the downside with the big boys. So, great question. Great question. Hopefully, that makes it simple for you to see. All right. That's why we use them. All right. We want to know when we're on the big boy side of the market, not anywhere else, okay? All right, so let's see. So great question, David. So we move our stop, and if it breaks again and go break, hook, and go, then we would re-enter. Exactly right. But remember, we've already figured that out. We're only trading in those areas, okay? That's the area we're trading in, is areas where we have wide open spaces and hopefully two of them stacked on top of each other. Right? Everybody, we've been doing that all week. For those of you who've been here, you've watched us do it all week long. We've been looking for areas where we can see the stacked on top of each other, and that's where we want to take trade. That area right there, and then there's another one right below it. So trade one comes here, we move our stop right here, and if it break hooks and goes here, we double our position. We're in the area to press our winners. You will not be successful unless you press your winners, folks. If you sit there and you trade one trade for 30 pips, another trade for 26 pips, another trade for 16, you will never with 30 pips. All right, you can't pull ahead that way. But if you have a winning trade, your losses are always going to be on one lot, but your wins are always going to be on multiple lots. How do you grow your account? Wins are always on multiple lots. Therefore, you're growing your account by trading that way. Right? You have stacked the deck in your favor instead of against yourself. Right? So there you go. All right. Let's see if I can catch any more of these questions. We got a lot of questions this morning, so hold on and let me scroll up there and see where they are. James, yellow lines. I don't have any yellow trend lines. Those are channels. A channel is different than a trend. I'm using a channel key to get my trend. Okay, that's a channel key. All right, and it's divided so that I can see the heart line. All right, 50% of the channel is the heart line. That's why it's yellow. All right, it is not an Andrews pitchfork. All right. So the blue lines are, I draw them. All right, when I put these lines on here, like this little one right here. I'll put this in here, the yellow line, I create a clone. Now, there's a channel, it's working to the upside. That's not totally different. All right. So good. Let's see what else we got here. All trades need a hook and go. All of them do. All right. Only 1% of the time does it not do that, Dave, so you got to wait for it. Yeah, but sometimes it goes. Yep, that's right, and that's called a missed opportunity. Let's see. All right, I guess we're good to go. Oh, wait, here, question from this morning. If a trade goes sideways, all right? When a trade goes sideways between sessions, do you get out or stay in? Depends on your skill level, number one, and it depends on where you are at, all right? If you decided to make a trade, all right, let me find you one here. Yeah, let's go see. I'm looking for one. Come on, give me one. Oh, here we go, Ozzy. All right. So we decided to make a trade in here for whatever reason. We've got a target up here. We say, okay, wow, yeah, we're going. Look at that. I've broken that area. I take a trade right in here. My stop is down below here, and immediately it comes down here and starts bouncing. All right. Now, once you've got your stop down in here, you hold your stop, all right? You commit to the trade. One of the things that traders don't do is commit to the trade. You can't win every trade, folks. That's just the truth. You can't win every trade. You got to quit trading, all right? So we're waiting this. Now, what they do is when they put a bottom in here that's above your stop, what they've done is said, there are no sellers below here. And you can see there's a little wick right down in here. They probed down here to see if they found any sellers, and there weren't any, all right? So as long as we're down below here, we're okay to stay sideways. The big problem is not the sideways move. The big problem is if they do a bear flag, a bull flag. Because if they do a bull flag, they're going to take you out. So if you see them building a bull flag, all right, to the downside, you got to exit the trade. If they're doing a sideways move, you find the bottom of it and get down below it and just hold. That's it. All right. So, and that's the problem with making a trade late in the session. If you make a trade late in the session, yeah, we always get sideways moves between the session. You make a trade late in the session, you've asked for that to happen to you, which is why we have rules that say we don't make those trades. If they close London, we're out of the market. We don't take a trade after London closes. All right? We rarely take one close to when London closes in New York. All right? Now, see, just by doing that, down here, holding on, you made out all right on that trade. Okay? See, that would have been fine. But here's one where you wouldn't. Let's say you made the trade right here. You made, okay, I'm in, and you're going for that target right there, and suddenly it goes down. You put your stop here below this lowest part here, anticipating a sell that it'll go sideways, and guess what it does? It doesn't go sideways. It does the bull flag, which stops you out, see? That's why and it's all about experience, okay? How many polls you got to do? 300 minimum. How many bull flags you got to do? 300 minimum. How many bear flags you got to do? 300 minimum. What do you got to do? You got to go do the work. What ends up happening? You don't do the work because traders are lazy and they get popped on this all the time because they haven't done the work. All right? That's what happens. All right? Now, we warn about that every single day because we always have newbies. All right? We always have newbies. But we warn about it. But newbies, traders don't listen either. So, all right, open it up, Pip. The bold white support line. These right here, no, that's the HSI tool that we use. It's a tool that we invented. We're the only ones with it, so you won't find it anywhere else. We invented this tool to help us find waves. So that's it. That's all they are. But they have PSRs and they have fib ratios in them, Raheel. Exactly. The pound New Zealand yesterday the entry was a go. Candle was about 30 pips. When was the ideal entry on the pound New Zealand? Pound New Zealand was where we actually took it. And what we did is we took a tight stop yesterday on the pound New Zealand, folks. Remember, there were two stops yesterday. For those of you who remember, we were over here. This is where we were. All right, here we are. There's a pound New Zealand. All right. There are two trades. There are two. It's got a pound in it. So the first safe stop is up here. All right. That's the first safe stop, big stop. The only way to make that trade is 1/3 of your lots. And then the other stop was above this last one right in here. There was one right in here about 50, 97, 72, I think, or 3, I forget what it, 73, I think it was. All right. So when the market broke, hook, and went right there, that was that means that your risk was only that. That's why we had there were people who only had 18 pip losses, and there were people who had 40 pip losses because they entered down here, right? And see, entering at the right time is really, 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 really critical, entering at the right time. All right? Those who entered down here lost 40 pips. Those who entered up here lost 18, all right? That's the deal. Now, well, we've talked about this all week. We only ever enter our trades with 1/3 of our lots, all right? So all of my traders who are in here, who aren't newbies, entered with 1/3 of their lots with their stop up here. They did not get stopped out, all right? But we took the loss anyway because a lot of you did it, all right? Because even though we told you for 4 days straight, always trade with 1/3 of your lots with 3 times your stop and add to your position. Newbies don't listen, and therefore they didn't hear it, so they all get stopped out. I didn't get stopped out, all right? So we were going to take the trade again. We're going to take it. We never got it again, right? And as you can see, the result of that. This is why you want to get hit. If you get hit with a stop, you want to get hit with a stop so that this doesn't happen to you. That's what doesn't enter the trader's mind. They're worried about a loss as opposed to a worse loss. So there's a good example right there. All right, back to you. Sorry. All right, there you go. All right, so how to review? Well, the problem, Steve, is that there are a lot of rules, Steve. There are a lot of rules. All right, rules. They have rules about margin management. You have rules about entry. All right. So every trade setup that we have has a rule, has a set of rules for it. Okay, number one. All right, margin management is 2% maximum. All right, we don't risk more than 2% maximum, and we only trade with, we divide our trades into 1/3 pieces. Okay, whatever you can trade, which is 2%. All right, so 2% of your account. Let's say it equals a 1 lot mini. All right, 1 lot mini. This becomes 3 micros, and 4 micros. All right, it equals 1. The first trade goes in on this one, 3 micros, all right? It pops up like this, pops down. We're waiting for it to break down below here. If it never breaks down below here, where we would add the second and third one here, then we only have 1/3 of our lots in here. And if that were to happen to us, we get lost. We only get stopped out with 1/3 of our lots, which means we'd only lose 0.04% of our account. See, that's why you do it, all right? So there's lots of rules, and you can't learn the rules. You're here invited to our room. All right, we're here in Morgan doing our room in Morgan's trading hub. All right, but it's our room, and all of our traders have the rules. All right. So you know, we're glad you're here. Hopefully you've seen some things you like. So hopefully you've learned a lot. And you know, a couple of you are upset because I called you the dumb money. So don't look at me. Look at the bankers. They're calling you the dumb money. How can I tell you? So anyway, let's see. Yes, it will be a little later. AX, do you trade Bollinger Bands only on reversals? Yes, we do. We have a complete reversal trade here, and that's why we do it. We do not use Bollinger Bands for what most people use them for. Most people use Bollinger Bands to find out where momentum is. We don't need to find out where momentum is. We can see momentum, so we use it for reversals. All right. When we're looking for a reversal, let me find you one here. Okay, well, let's just take this one here. All right. When we're looking for a reversal, we're looking for the attempt to expand the Bollinger Band, and then the failure, and then it will go the other way. And it always happens the same way. We have a breach of the Bollinger Band. We open and close the candle inside the Bollinger Band. We get an arrow and a painted candle, and there's our trade to the downside. All right. The opposite way. Now, for the most part, we're not trading counter trend in here. We have traders who do that, but we don't trade them in here because we always have too many newbies. All right, breach of the Bollinger Band, open and close the candle inside, arrow's already there, there's the painted candle, there's our trade. All right? We use it to go the opposite way, not the way most traders do it. So we do trade Bollinger Bands, but not the way you do. You'd have to learn how to do it. When is the next class? Monday, Rick. Monday is the next class, Monday, Tuesday, Wednesday next week. What are the thin yellow? They are simply bottoms and tops. That's all. They are not Donchian channels. No, it's a bottom. That's all. It's a bottom. So we're target traders. We want to be able to find this bottom without having to find that candle, right? Because we got to put lots of things that we have to attach things to bottoms and tops. So we created these bottoms so we wouldn't have to go find the stinking candle. If I'm sitting here and I look at that and I go, oh, well, there's a candle back there, and I want to put a HSI on here, I don't need to go find that candle. I know there's a top there. So I can just go sit there and go, bam, and I get it. See, it helps me do things faster. That's all. A little bit later here, Steve. Well, we're trying to take questions here because we're going to finish up the week with helping everybody get, you know, as far as they can go with us. You know, while you're here, and then we'll tell you what the offer is going to be. So hang in, everybody. Be patient. Wait for your trade to come to you. No different. So, where's the heart? It's 50% of the channel, Jeff. You just get a channel key and put 50% on it. That's it. Heart line is that. It's 50%. Right? Horizontal white lines, pivots. No. We do use the pivot point. We'll tell you that. We do use it, but we use it again differently than most people. We build a grid off of it. This is the pivot point for today, right here. Changes every day. That's the pivot point, all right? So we build a grid 30 pips above it, all right? We go up, you know, 200 of these and 200 down, all right? That's what we do it at, all right? So the market moves on 30 pip pulses. Why does it do that? Because the fib is 34 pips, all right? Take the spread out, you move 30 pips, all right? So when a market moves from this T30 and you got enough movement to move it in, all right, it's going to move 30 pips because that's part of the sequence. It goes 30 pips up to here. So we have the ability, if that's inside the wide open space, to have another reason to trade that trade up there. We want lots of confirmation, okay? Then that T30 holds that thing, for the most part, all the way over here to a non-farm payroll. So we get them every day. So we use the pivot point, but only one of them, build the grid off of it. So that's that, all right? All right, we don't, we have special ones, highly specialized over here. We don't tell anybody what they are. We don't tell anybody, Wes, sorry. That's one of our secrets. One of the things we found, and we went, oh my gosh, we can define the desert, and it works 98% of the time. So we have a secret, all right. It's moving average, but it's our proprietary information. How much trade? You need $500, Nick. In fact, that's all we ask you to do is put $500, and you're going to trade micros. All right. When you learn to trade, you're learning to trade is not like trying to make money. But here's what happens to traders: they want to go learn to trade, but they simultaneously want to learn to make money. So what do? They go put a bunch of money in the account, more than they should, and they're going to lose it all. Why? Because they're trying to make money. What you do is you put a small amount in there so that the most you can lose is $500, and you trade. That means you have to trade in dimes. You have to. You have no choice. All right? So that's how you do it. Once you start seeing, you know, hey, I got $750 worth of dimes in there. Oh, I got $1,000 worth of dimes. I've doubled my account. Now you know you're getting the skill level to go up and start trading and fund your account correctly, and then go do it. All right? So. All of them are drawn by you, Jim. That's the whole point, right? Everything on here, I'll show you what a blank chart looks like. That's it. That's a blank chart. The moving averages are there. There's one MACD on here. This MACD comes from the 60-minute world, and we're on the 10-minute chart. All right? We don't trade the 10-minute chart. All right? We never trade the 10-minute chart. That's a blank chart. Everything on here you have to put on, with the exception of the T30s right here and the moving averages. All right? Now, it's the process of doing that that gets you in sync with the currency and what it's trying to do. If you're not doing that, you're guessing. I think it's going up. I think it's going down. Here's the deal. If you think, you're in trouble. We don't think. We do the work on the charts, and then the chart says, we're going to go up, or the chart says, we're going to go down, or the chart says, sit on your hands. There's nothing happening here. See? And that's what you have to do, and traders don't like that. Why? Because that means you have to do the work. I want the chart to just figure it all out for me, man. If it was that easy, you couldn't get your garbage picked up, because your garbage man would be a Forex trader, right? It's not easy being a trader. It requires that you do the work. It requires that you get the education. It requires that you do the experience. It's not any different than any profession. This is a business. And if you're going to trade with the best traders in the world who make millions of dollars because they're good at it, then why would we ever think that we could trade a simple moving average crossover and be as successful as them? They know a whole lot more than we do. Our job is to learn as much as we can. All right, on the Yen, you said you're waiting for the break of the HSI line. Does it mean that we should wait for the candle to close below? Yeah, that's a good question, Sam. I'll go to it. It depends. See, here's the deal. It's no black and white in trading. All right, depends on the candle and the real estate of the day. All right, so when I come down here, I can see that's a barrier. How do I get below that barrier? Well, that could look like anything. That could be a close below here on a 60-minute chart. Have they closed and opened and closed a candle in there? Close. All right, then they pulled right back. All right. If there's still a head and shoulders, it's still a head and shoulders. All right. So when I get down to the 10-minute chart, what is it got to be? I need a break, hook, and go here, and it's got to be pretty powerful, because if it's bright red and it's a 4-pip candle, I'm not trading it. Why? Because I know this is a potential head and shoulders, and the 3 times this has stopped it. See, there's no black and white answers. What does the chart tell you? This is what I've been telling you all week. What does the chart tell you? You have to learn to read charts. We call it being a chartiologist. You ever go to a doctor and you get an x-ray? It's done by a radiologist, all right? Well, we want to be chartiologists, people who can read charts. And the problem with traders is they don't want to spend the time it takes to read charts, because it's thousands of hours, all right? It's thousands of hours you got to spend learning how to read charts. But you better learn to read them right, because if you learn to read them wrong, you're in trouble, all right? How long did it take you to learn patience? I'm still learning it every day, Vaughn. so there you go. All right. The yellow lines and crossover are chart generated as well. Yeah, that's true. All right. These vertical lines are chart generated also. One of them is a moving average crossover. The other is a MACD crossover. We don't trade a moving average crossover. Everybody who traded the moving average crossover right here entered on that candle. That's where they were stopped out, right there, and now the market went. That's why we don't do that. Okay. All right, close it up and we'll take these questions. Okay, Pablo, what do you prefer to target, the HSI, PSI, or FIBs? Yes, all of them. I'm looking for confluence. Exactly right, Pablo. Confluence. Multiple things using multiple places in the chart coming up with the same answer. All right. The R1010 or 6 R10 minutes. What is the momentum indicator on top of that? It's called an HMI, and it is a special proprietary oscillator that we developed. These are oscillators that we developed. They're not RVIs, they're not RSI. My partner is a genius. All right. My partner is a mathematical genius, and he's figured out how to do this. We have not optimized this system since 2003, folks. 2003 when we brought it in. Hasn't been optimized yet. These are HMIs. They're a special indicator that allows us to see momentum. We don't want to see momentum by itself. We want to see momentum in harmony. Momentum in harmony with the same move. Momentum in harmony with the same move. Momentum, no harmony. That's gone. Momentum in harmony with the same move. When we have a preponderance of evidence, what does it do? Do we trade this? We don't trade one thing here. Not one of these things do we trade. It gives us the confidence to push the trigger. And most importantly, if we push the trigger, to stay into the target. Right? Anybody can push the trigger. Very few people can stay into the target. The job of finding the targets is the traders. Right? That's yours. There are no lines on here unless you draw them. Right? So good question. Because we used the channel key, John, we found it works best. Right? You'll get information, Jen. I don't know how Morgan handles that. We're here from Morgan, by the way. So that's it. Morgan will take care of that for you. I can't answer that, Jorgen, and there are secrets. Sure, there's a way. I don't need an HSI to trade. It just is a helper. It helps me find ways. I don't need an HSI. All right? I use fibs. Remember, HSI's got fibs in it. HSI's got support and resistance in it. It's just a special tool that has a high propensity of finding good targets that we can use for confluence. That's it. And when we're looking for areas that are where there are no barriers, it helps define the area where there's no barrier, which means we can make the trade. And the more you do it, the more you see they're going to make the trade in the wide open space. All right? They won't always do it. They're not going to always do anything, but they're going to systematically do it. All right? So Graham, too fast for you, Graham? That's why we have 200 videos, so that you can take it one little piece at a time, watch it, stop it. I don't get that. I mean, back it up. You can do all that kind of stuff, all right? Yes, it's too fast. You can't learn in 4 days. I've been saying that all week. You can't learn to be a trader in 3 weeks. It's a methodical process. You take one piece at a time. I'm going to learn fibs today. You take the whole day to learn fibs, and you work. It's all done by yourself, by the way. Trading is done on your own. What you need is somebody to push you through and show you how to do it correctly and why you do certain things. And then day in, day out, reiterate why you're doing what you're doing. If you've seen nothing from me all week, you've seen me reiterating constantly, only trade in the wide open space. All right? Don't push the button. Wait for a break, hook, and go. All right, that's the purpose of somebody being live in the market, is to check you to make sure that you're not doing, quote unquote, not calling you this, dumb money stuff. All right, dumb money buys at the bottom, or sells at the bottom. Things like that. I'm reiterating stuff that you need to know day in and day out till it becomes part of your DNA, not mine. Yeah, there you go, D. Don't push the button. Do you do assessment of your students? So don't trade size until demonstrated. My experience is that winners will show their trades, losers will not. Human nature, thousands of hours. What percentage of your students fail? Well, we have students who fail like most people, but we have a huge percentage of them that stay. All right. We have a tremendous amount of traders that we have still from 2003 and 2004, Jim. You don't stay from 2003 to 2004 unless you're there, unless you're doing things correctly and successful. I have many students who have gone on and run hedge funds, all right, or they are students, or they are traders at hedge funds, all right. So do I keep a track of that? I don't keep track of it. So, you know, that's just the way it is. You'll get that information. No, it's not a good strategy, Joe, where it's legal. We can't do it in the United States, FIFO, but I can tell you hedging is not. There is a way to hedge, and that's to hedge two different currencies. Now, again, that's different. That's not what most people think of hedging. Think of buy and sell, right? So hedging is not a good strategy. You have to be the best at knowing exactly. You got to be able to pinpoint the time to release your hedge, and most traders can't do it. Knowledge is power. Take the time to learn. Rebecca, after a few months of practice, can we send in our chart for verification lines? And you start from day one, Rebecca, doing that, by the way. We only trade, this room is open in the New York session only, Jim. We trade in the New York session, the hardest market to trade, because, first of all, because it's the hardest market, we get a little bit more time when we're not actually trading, we're actually training. Our purpose is to be a training room, not a trading room. We use live trades to teach it, to help us learn how to do that. That's part of the training process, all right? But our purpose is not to trade, it's to learn to trade. We're here to teach you to fish. We're not here to give you a fish, all right? Let's see, Pedro, sorry, Pedro, it scrolls off the thing, so sorry. If it scrolls off, I don't see it, all right? If I get a bunch of questions and yours scrolls off, boom, I don't see it. I'm not trying to be nasty. How long, Pedro, in new territory, how do you set the chart? You go and redo the charts from scratch, just like we've done every day this week. You saw me do it every day this week. I ripped everything off and started from scratch. That's what you do. All right? You go back in the time in the 240 world, and sometimes you got to go the day if you have none, but we want to be in the 240 world. We have a whole video on how to do PSRs. PSRs are the hardest thing for traders to get. They're actually easy. But your brain rejects it. All right? So there you go. Yeah, you go to the 10-minute to see the hook, and then sometimes to the 3 if the market's moving fast. Yeah. Okay, Bob, good for you. See, it's applicable through all the markets. I taught my brother to trade. He's a phenomenal stock trader. All right, that's a broker. He's a broker. Taught him to trade using this, and he makes his clients tons of money. How long will it take you for us to learn all this? I don't know, Parvez. How hard are you willing to work? If you're willing to work 18 hours a day, it'll take you shorter than the guy who's willing to work 1 hour a day. I don't know what you're willing to do. I don't know what your lifestyle is. I don't know whether you can do it. I don't know whether you'll pay attention to the rules. I don't know whether you'll try to butt heads with me and say, you don't know what you're talking about. I got people who do that all the time. All right? And that's fine. They need to go somewhere else. All right? That's fine. Are there areas of low liquidity? Yes, but the liquidity in the Forex is a whole lot different than it is in any other market. In order to move the euro-dollar, 1/2 a pip in the New York session takes $35 million. A half a pip. Right? So let's see. What do you use at the top and bottom of a range if there are no PSRs? Okay, you use Fibonacci extensions. Good question, by the way. Got the areas of low liquidity done. Can you show the work on A? What? On A? What is A? I don't know what A is. Scott, how many days do you use to draw the moving average lines, or how many days do the big boys use it for their moving averages? I don't know. I just know what mine are, and I use mine. That's it. I have no clue. How much did you make last year? Did you make last year using these strategies over space? We made 40,000 pips, Tony. I don't know what that is. If it was micros, it's 40,000 micros. We have people, we don't count my trades, we count our traders, right? I run a business. And I'm a trader for 2 hours a day, right? That's it. I can't be in the market. I run a multi-million-dollar business here, right? So if I was what came into this thing to be a full-time trader, and it was a full-time trader and traded money for a while, all right? But we created this charts, and it ended up being a business, and we got drug kicking and screaming into here. What you do, doesn't matter what I get, it counts what our traders get. Our traders averaged 40,000 pips last week. Let me pop up our best trader was Michael Anthony. You can see here's his equity curve. Okay, you see initially, this is when he first came with us, he was not profitable. He became profitable. How many pips is that? 27,508 pips. Net 26,243. All right. That's live count right there. See that? Okay, hold on. It's coming up. It'll come up. There you go. Let me start all over. There we go. All right. So you can see when Michael Anthony first came, Michael Anthony's here. Okay. So February started doing pretty well. All right. February started at the end of the year right here. He netted 27,508 pips was his gross count, and 26,000 was his net pips. All right. That's it. That's live account, folks. All right. So there you go. All right. Doesn't matter what I get. Who cares what I get? What counts is what could you get? What can you learn? All right, see that? 110.9% growth. All right. No, it's not mandatory. We have lots of traders who don't use that GW. Remember, a trade setup is for newbies. All right. Our trained traders don't use an RF1010. All right. An RF1010 is a trade setup. Traders don't use trade setups per se. They have their own methodology way to do it, but they're not looking for that kind of stuff, right? Eventually, you end up you trade what you know how to trade. You trade price action, and when you get an RF1010, you double at that position. See? Let's see. Back, but it's well out. Thank you, Andrew. Pound chief stop out. Should have said it. Stop at 32. Okay. Here's the deal, AJ. If you trade the way we teach you, 1/3 of your lots with 300% more stop than you in, you don't get stopped out with that kind of crap, right? Then you add, but it forces you. You have to add to your position. You have no choice to add to your position. You'll never make money, right? So that's why you got to do it, and that forces you to do the methodology. And the keys to trading is you must press your winners without exception. Without exception is the key word there. All right. Do we have traders? Yes, we sure we do. Yeah, well, in fact, we teach you to do that without being dependent on the software. We don't want you to be dependent on the software. That's not what we want you to do. We want you to be dependent on yourself, being able to do it. All right. The thing is that in the beginning, you need lots of help. All right. And you need to not blow your account out quickly, which happens to most traders. All right. There's an ebook we write. I don't have time to write books. I'm mentioning Greg Michalowski's book. If you want to go read his, Attacking Currency Trends. He's a good friend of mine. He mentions me in that book. How did you draw the big wide open spaces? If there are fibs, I don't see your upper range. It's a combination of things, Jim. It has to be specific to the real estate of the day. All right? If we're in an extreme area, all right, then the only thing you got is fib extensions. That's all you got. It's fib extension. That's what you do. You use fib extensions. That's all you can use. Right? But one thing to remember, if you're in extreme areas like that, the big boys don't like that either. They don't have enough information for them to do it. So they won't be there very long, typically. Let's see, question, okay. What is the top 3 pairs to start for beginners? Great question, Jan. It's Aussie dollar, New Zealand dollar, and the Euro pound. Aussie dollar, New Zealand dollar, and the Euro pound. All newbies start with those 3 currencies. All right. Nice job. Good question, Jan. That's a well thought out question, something that I'm surprised nobody else asked that yet. So way to go, Jan. Okay, thank you, Kurt. We don't do that, Jan. I can't answer that question, Gillian. We do have some other feeds. I just don't know if that's it or not. But if we have yours or not. SG and Jim. I think I got Jim's. I got just G's, Jim, SD. Yeah, I think I got them all. Okay. Jude, I'm wondering when the support becomes a reason. Wouldn't it be advisable to trade the future resistance for our target, or rather to use fibs? I use PSRs. I am heavily favored on PSRs, but they use fibs also. So what do? I use them both. I'm looking for confluence, areas of the chart that have 1 to 50 ignots. Okay, so I don't know, Steve. I don't think so. I know Dean pretty well. Dean Malone and I are really good friends. In fact, he lives not very far from my daughter. When I go to Dallas, he and I always have lunch together, so I'm very, very familiar. Also, we have done training together around the world. He and I have traveled together and done classes all over the world together. So let's see. I practice 3 or 4 hours a day, 7 days a week. Amanda's a brand new trader. She's been very, very successful. What's the name of the book? I didn't write a book. I'm mentioned in a book by Greg Michalowski. It's called Attacking Currency Trades. I have an ebook, which most of you got already from here. Right? Please explain PSR. Okay, I've done that a million times this week, and I'll hold that, and maybe we'll do a chart. Okay, because it takes 10 minutes to do that, folks, and we got lots of questions here. Remember, this is our last day together. All right, so I'm trying to answer some questions here to kind of get you on the right track. All right, so if we get a chance, we'll do that. But PSRs we have done PSRs 40 times this week. All right. Edgar, you'll get that from, I don't know, because I'm not part of that deal. Morgan will be taking care of that in a little bit here, so just wait. Do I teach more than, yes, I teach more than I trade live, because, well, I trade live every time I'm teaching, right? But I don't trade the off hours where my students do, right? Because I run a business, right? With thousands of traders coming in, data feed from all over the world, all those kind of things. It's a big job. Right? It's an ebook called Cooking in the Forex. Right? Go download that. You should have already got it, but that's it. Right? I don't know anything about Michael Anthony's here. He can tell you. Is Michael Anthony here? Let's see if he's here. He's usually not here on Friday because he's a trader who doesn't need to be there. Maybe he's not here. Okay. How do you know when the trend is a pullback or reversal? You go to the work mass and you'll know the difference between them because every currency is the same. Every currency runs differently, I should say. All right. Every currency has a typical pullback. Every one of them has a typical retracement. It's your job as a trader to know that. All right. A reversal is only when you take out the former trend and the support or resistance that holds that trend together. All right. We've talked about that all week. All right. We've shown you how that does. And when you get a trend reversal, all right, got to pull back. But when is it going to be a trend reversal? All right. Let me see if I can find one real quick. I forget which ones. It was over there on the exotics, I think, where we were doing them. Here we go. All right. All right, so here we are. We got to pull back. 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 We got a breakout. Means nothing. All right. Take that. So this resistance out right there. It's now a reversal. All right. There you go. There it is. Tony, there are 1,000 break, hook, and goes. It is a candle. If you're going down, it's very simple. There could be 1,000 different ways this looks. One down, one up, and one goes. All right. Now, that one candle may be 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3 go. All right, could be anything. All right, there's 1,000 of them. You don't answer the question unless you do the work. I mean, you'll never answer the own question unless you go do it and spend your time on a 10-minute chart and go back and do about 1,000 of them. All right, and that's about how many break, hook, and go. What does that look like? All right. So here's one right here. All right. Here's a break. All right. Here's a break, hook, and no go. All right. Here's a break, hook, and go. Right there. All right. That's why you wait for the go, because if you don't get a go, you're going to get a no go. All right. See that? It's one up, down, and go. Never changes, but it could be that one right there, the one I'm showing you right here, took one candle up, 1, 2, 3, 4 candles down, and 5 was the one to go in. See? 1 up, 4 down, and 1 to go. I can't show you a break, hook, and go without showing you more. There's so many ways to do it. But you got to go look at them. That's how you learn them. And you don't trade without them because the market overwhelmingly retraces. Only 1% of the time is it not going to do that. And the 1% of the time that it goes, you're in it. You just missed the opportunity. Right? You're in New Zealand now on a hook. Hold on, I'll look at it. And we'll see. New Zealand is in a piece of junk right now. So let's go look. Okay, yeah, there's a hook, a no-go. Break up again. Now now that took a hook all the way up. Now if you get it again to the downside, this is no good, right? This is not any good anymore. Why? Because now you got to break hook and go here. You've already set a new bottom. So a go up here means nothing. Now you got a bottom down here you're gonna have to take. So it was a break hook and no go. Now we set up a new one has to have a break hook and go here. All right, there you go. Okay. And, okay, we'll do. All right, so hey, let me answer these last questions here, and then we're going to open it up. Morgan's going to talk to you for a minute. Okay, so let me make sure I get Glenn and Jed done. What if the 240? Yes, we trade the 240. This is how you just remember, Jed. The guys who are trading the day channel have a totally different agenda than we do on the 240. The guys who are trading the 240 have an agenda that matches what you and I are trying to do. The guys who are trading that day chart are Warren Buffett and George Soros and those guys. Their agenda, and they can handle any movement that there is. Right? They're not, what is it going to do today? It's what is it going to be by next September. Right? So we trade where the boys are thinking like us. Okay. Glenn, Scott, I'm confused regarding pending orders. The Ozzy trades that occurred Wednesday night happened in less than 1 minute after the news release. The only way to enter those trades was to set pending orders prior to the news. That's correct. I thought you taught against doing that. Can you discuss this, please? Yes, I can. Glenn, as a new trader, you're flat in the market. As a newbie, you don't do any of that. As an advanced trader, you do all kinds of stuff. We teach how to do that sort of stuff. Now, you're in our room. We're over in Morgan's place, but we're in our room with our traders. Our traders can do that. All right? Does that make sense? See? Our traders have lots and lots of tools that they've been taught that you don't have. But when we're in a room with a bunch of newbies who are trying to learn, which is great, that's what we want. We love that. It's awesome. But the deal is, we have to set the rules for the lowest common denominator. That's the trader who needs to be flat. So we set it for flat. Right? Although our traders will do it. Right? They have ways to do it and stay in trades. They also can stay in trades and don't have to get flat. You have to get flat at this point in your career. A year from now, you'll have learned the techniques and how to do it and how to make it statistically probable. You could learn how to do it, and then you'll be fine. So, all right, I'm going to back out here for a minute and turn this over to Morgan, and he'll be popping in here, and we'll see what happens. I'll see you in a few minutes, folks.
All right, great. Thanks, Scott. We really appreciate you taking the time to be here. And